Hey, investing friends, what's happening? We're back for another Monday night of live stream. I'm glad to be here with you tonight. Let's take some time tonight. I wanted to share with you just some thoughts around this week. As you guys know, we've got a big day ahead of us on Wednesday. And, if you recall, I went through my historical investments a couple of weeks ago, and I came down with like 23 lessons learned. I make a lot of mistakes, so I have a lot of lessons learned. And I decided I shared 5 of those last week. I decided to share 5 more this week that were related in some way to what's going to happen this week. So hopefully you'll find that interesting and exciting. And then also I got a question this week on the Discord. If you are not a member of the Discord and want to be, there's a link in the description to this video. Just click on that, register for it, join us on the Discord. We'd love to have you there. We chat a lot every day. We're in there chatting about stocks and stuff like that. So if you want to be a part of the Discord, find that in the notes of this video. So let's before we get started, let's see who all has joined us this evening, and a beautiful evening it is here in Alabama. So let's see here. We've got Kenny Eugene. He says, "Let's go from Bayou Country. Who dat going to beat them Saints?" Yeah, that's right, my friend. There you go. So welcome from Louisiana. And then we got Michael Swami, who's from the other city with bayous, which is, he says, Klein near Houston or H-Town in Texas. So it's good to have both of you guys with us. We've got the bayous. I don't know if I'm even saying that right. Bayou, Blue Bayou. I think that's what Linda Ronstadt used to sing. The Blue Bayou. So anyway. So good to have you Bayou brothers here tonight. And we've got Fast Eddie. Good to see you here, my friend. We've got Billy from the Philippines. He wants to know, do I put my chickens to sleep for the night? I see some do. Well, actually, no, it's a little bit automated, I guess. I have a door on the front of the coop that is has a solar powered electrical thing, and when the sun starts to peak up in the morning, that photo cell tells that door to open right up. So it opens up, chickens come out, they get their food, their water, they do their thing for the day, and then when the sun starts to set, the chickens know that it's about time to go to bed, so they will actually go and get in their coop. When the sun goes down, that photo cell says the sun's down, it'll lower that coop door down. And so basically they put themselves to sleep. So it's pretty cool. Chickens are not a lot of work, actually. You just have to keep them fed and watered and dry. And otherwise they're good. All right. We got Michael. He bought T-Row, Intel, Comcast, United Healthcare, Chevron, and Pepsi today. Boy, he was doing some buying. You must have come into some Jack, Mr. Swami. So good job, man. That sounds like a fun day. So yeah, that's awesome. Good evening from Sacramento. El Dynamico has joined us. Good to have you, my friend. We got Bob Wright on the show tonight. He is from Oregon, so it's good to see you, Bob. We got Pat here. I don't think Pat ever misses, even when he's in a place that doesn't have any Wi-Fi. Somehow he ends up joining us. So good to have you, buddy. He's from the Upper Peninsula of Michigan. Slammer 6789. I just love saying that name. I don't know why. He's in upstate New York. So both of you guys, Pat and Slammer, you're going to start seeing some cold weather soon. We're not seeing any cold weather here yet in Alabama, but hopefully in the next 3 or 4 months we'll see some cold weather. Hey, Rust is here. It's good to have you, buddy. Yeah, we have a Bayou quorum. That's right. Absolutely. And let's see. Today I bought the most disliked stock, Disney. They traded at 19.3 times diluted EPS, which seems fair. Well, you never know. I mean, I hope that goes well. I don't own Disney. I tend not to go after the stocks that can be, severely impacted by things like the pandemic and stuff. So I don't own, any airlines. I don't own any Carnival, like cruise lines. No Carnival, no Royal Caribbean. I don't own hotels. So it's just, it's just a way for me to sleep better at night, not wondering if if the next pandemic's on its way. So, and we got Jim Betts is on the program tonight. So that's awesome, guys. Let's go ahead and get into what we want to talk about tonight, and that is this week. So you guys, are you guys excited for Papa Powell to kind of lay some news on us on Wednesday? I'm not. Actually, I don't really care, to be honest with you. So let's get Jim off the screen there. And now that I am done, fiddling with these buttons, I've got the screen up. And so anyway, this is actually episode 39. Can you believe that? I started this, 9 months ago, thinking I'll do this a couple of times and see if I like it. But man, 39 episodes, and I didn't hit every one of them. Things come up, but 39 episodes, that's a lot. And you guys have been here, and I appreciate you guys so much. So you're the reason I'm here. I wouldn't be here otherwise. So I'm glad you're here, and I'm glad we're together tonight. So thoughts on potential Fed actions this week? I would just say it like this. I don't think these Fed actions this week should impact our investing decisions at all. So if you're out there thinking, hey, I'm going to time this one way or another, I'm going to either, sell off or buy, I'm going to go into leverage, or I'm going to maybe buy calls, puts, sell calls, puts, related to this decision, I would just ask you to, reconsider and just think about the fact that we are investors. And as investors, we want to invest in solid companies who are going to be around for a long time and do very well for us for a long time. So therefore, meetings like this really don't change my approach to investing. And so with that, let me share these 5 things. I'll share these 5 things real quick. And and I've got them numbered here based on the number they're in my list. Remember, there's like 23, 25, something like that. So number 8 on the list is never buy a dividend yield by a valuable company that happens to pay a dividend. And so you just say, how does this relate to Wednesday? Well, it relates to what I just said. We are in the business of buying valuable companies that, happen to pay a dividend for us. And so we're not out there trying to manipulate the market or trying to, gamble, trying to bet on, one thing or another. We're looking at companies. So this kind of relates to that. It's kind of also related to the fact that you shouldn't chase dividend yield, because if you see a yield that's too good to be true, chances are it probably is. So don't let a yield change your investment strategy. Don't let a Fed decision change your investment strategy. We should invest the way we invest. And, over time, over the long run, I think we'll be better off because of that. Number 10, it is better to invest in a solid, fairly valued company than a mediocre company that is undervalued. And I will admit, I may have stolen this, but here's the way I kind of look at it. The first time that I will say something that somebody else has said, I think actually either Charlie Munger or Warren Buffett said this, but, the first time I repeated, I'm like, well, Charlie Munger says, and then, the second time it's like, well, as I've heard, it is better to invest in a solid company. And then the third, fourth, fifth time I say it, it's like, well, as I always say. That's just the way it rolls, man. All right, so it's better to invest in a solid, fairly valued company than a mediocre company that you can get for a good deal, right? Don't just look for good deals, look for value is the point of that. All right, number 17, looking for a good deal. So speaking of that, are you looking for a good deal? If you are, don't buy cheap stocks. Buy stocks that the market has overreacted negatively. So let me give you an example. And it's off the top of my head, but an example would be Walgreens Boots Alliance or 3M, right? So, don't buy stocks that are cheap. Just buy stocks that are quality companies that have great long-term trajectories, and that the market, for whatever reason, whether it's a trend, a sentiment in the market, or whether they've over compensated for some negative news, there could be that going on. There's some reason that the market has undervalued the company. And so what we're looking for are those companies where we believe the market has gone too far. And when they've gone too far, it's time to back the truck up within our rules of investing, right? So, within our risk management, which is our due diligence, our diversification, those kinds of things. So back the truck up within your rules when that's the case. All right. So number 21, timing the market rarely ever adds value to the portfolio. I have proven this over and over again. Sometimes we get a little cocky. I say I'm including you in that. Sometimes I get a little cocky and I think, man, I really got this figured out and this is the way to go. But you know what? Just as soon as we think we have it figured out, we don't. And so timing the market rarely, if ever, adds any value to the portfolio. So that includes this week. We're not timing the market related to the Fed. We're just investing. And number 22 is don't attempt to time stock peaks and valleys. This is very similarly related. Pick solid investments and let them work for you. The point of this is, at least the way I think about it, it's when I'm investing in a company. I'm investing in a management team. I'm not really investing in a stock. I mean, I'm buying a stock, but I'm investing in the management team. So when that management team is out there working for me, they're solving problems, they're getting things done, they're improving sales, they're creating value. They're doing that. Yeah, they're doing it for themselves, but they're doing it for me because I'm a shareholder and I get to partake in that. So I'm not trying to time the market. I'm not playing the market. I'm trying to pick solid investments that when I go to sleep, they are up, working, and making things happen for me as an investor. So never try to time it. So do I care what Powell does on Wednesday? I care in the sense that I think if he does a 0.5% reduction, I think that will send the trigger that they have delayed, that they are late to the table. I think if they do a 0.25, I think what they're saying is, hey, we are in this process. We believe that it's time to start reducing rates. If they do a 0.5, I think what they're saying is, whoa, we better get this train started because things are getting a little bit dicey. So I think, we may see actually some good buying opportunities if it does go down by 0.5%. So, or 50 bippers, as they call it. Okay, so there's that. Hopefully that was worth the price of admission, which is 0. So if it's worth more than 0, you've already gotten your money's worth from tonight, and we can just shut her down and go watch Monday Night Football. By the way, just some feedback on Monday night. Remember, Monday night was conflict with Monday Night Football. I was really worried about that last week, and somebody made the comment on here. I don't remember who you were, but it was a great comment, and it basically said, hey, I can multitask, don't worry about it. And so I think that's where I ended up. It's like, you know what? If Monday night works for me, let's do it on Monday night. If you want to watch the game, you watch the game. If you want to watch this live stream, you watch the live stream. If you want to do both, you know what? You can do that. I think we're all capable of making that happen. All right, so let's remove this from the screen. And is there anything else I want to show you before we kind of get kicked off here? Yeah, I'll show you this. As you guys remember, I've been building this Excel model for my portfolio. And, I use several apps to track my portfolio, but none of them gave me everything I wanted. I have them in several apps. So I built this spreadsheet and I'm really liking it. It's becoming my go to model. There's still some things I'd like to put in there, but it's just like, improving it over time. So let me show you where I'm at on this. Present, share screen, window. Here we go. You guys ready? Boom, there it is. I'll make it a little bigger so you can see it. There, is that better? We can't see it all on one screen when it's bigger, but you can see here, this is what I call the wealth circuit. It's like, I don't know, I was in the electric business, and a circuit is, it's a closed loop, right? So we want to have a closed loop in our investing. We want to have clear goals. We want to understand what our processes are. We want to have good diversification. We want to have risk management. We want to have a complete circuit when we're investing. And so anyway, the portfolio value at the end of the day today was I hit, and I shared this on the Discord if you were on there, but the portfolio hit a new milestone this past Friday, which is 1.6 million. Really excited about that. It went up again today by another $8,000. You can see that here, which is about 0.5%. I have currently cash available to invest about $26,000. And that might sound like a lot. It's really not a lot. It's only 1.6% of the portfolio. So another way to think about that is I am 98.4% invested in the market. I do have a little bit of cash here in case a deal comes along and I just want to jump on it. So, I think that, who knows, that might happen. We'll just have to see. The cool thing is at the end of last week, I update this on a weekly basis. The last week, the portfolio went up about 3.5%, and year to date, we're up 15%, 15.2% actually. So my target in a year is 8%. So to be at 15% is really awesome. This is a chart that I use to track that, and you can see it bounces around, right? I mean, this yellow line is a year to date percentage return. And sometimes I pull money out of the investment account if I need to pay money for something, like I'm investing in a business, and I'll tell you more about that when it actually starts, but I'll be taking some money out probably to continue to invest in that business here over the next couple of weeks. Hopefully it'll start October 1, and I'll kind of give you an idea of what that is. But anyway, I'll take some money out. I'll put some money back in. And but at this moment, it's about even. I think I have net, withdrawals and deposits. I've put in about $5,000 for the year overall. So most of the return, all but $5,000 of the return, is from investing, and so that is really cool. But you can see here at the week before, it dropped to 11.6%, and then boom, right back to 15.2%. So it's been a fantastic year. You can see my diversification here. I kind of break things into these segments, investments by categories, what I call it. I have dividend growth. I have dividend income. Then I have some money that's in the S&P, and then I have a value section. And then you can see my diversification here by sector. And it looks pretty good. I don't think there's anything out of whack. You can see this brown one is the S&P 500. That's that 28% that you see in the categories. So I don't know how else to break that up. I just call it ETF. But it's diversified in and of itself because it is 503, 504 companies within that. So it's pretty well diversified. So anyway, that's my update for this week on the portfolio. So things are going really well, but it does mean that there's not a lot of opportunities to buy out there either. So let's come back and see what you guys have to say. There is one other thing I want to cover, but I want to see what you guys are talking about right now. I got to get back up here, man. All right, let's see. All right. Gabby Bear is at 34,000 feet. Man, that is fantastic. I don't know if I've ever broadcasted that high up in the stratosphere. Where are you going? Are you headed home? Or are you headed on a trip? Let us know what your destination is. So we'd love to hear that. Yeah, Suzuki Man 89 says Wednesday will be interesting, and you are correct, my friend. It'll be interesting, but only from an entertainment perspective. I don't know that unless I drop this $26,000 into the market, I don't know that there'll be a lot that I'll be doing on Wednesday. Let's see what Jim did. Jim sold all his Walmart, and he bought $2,100 of I guess it's SPACs, I think, is like a money market. And I know what RITM is. I just can't think of it. CNQ, MFC. Man, you are buying all kinds of stuff. Merck, Tyson. Man, you're really spreading it out there, my friend. So, what caused you to do that? What caused you to sell out of Walmart? I know it's running up, but just curious as to why you ran out of the Walmart stuff. I don't own Walmart. I'm just curious. So let's see. Jim Betts was a busy week, but did you get an ice cream from McDonald's? And now I'm curious about that. So we got to see. The machine was broken. Had to substitute hard liquor for the ice cream, or maybe on the ice cream might have been better. Hey, Greg is here. Good to see you, my friend. I think we were pretty close today in our portfolio performance. So it's good to see you, buddy. Yeah. And let's see, Kevin Mendoza. So we have a Bayou, what is that called? Quorum, a Bayou quorum. And now we have a Kevin quorum. So we are set to go. Man. All right. El Dynamico says he also multitasks. He says, I shave my face and listen to this video. Well, that's good, my friend. I'm glad you shave your face. That's awesome. Yeah, so skills. I'm not sure what skills those are other than trying to get these screens to go up and down. But I'm getting there, man. I'm getting there. Oh, wait a minute. Oscar, welcome, Oscar. It's good to have you, buddy. So, hey to you. Hey from Alabama. So, Michael says, my math tells me that your portfolio is 1.625 million. Actually, it's 1.618, but who's counting? So it was, we had 8 today, and we were at 1609 on Friday. So 1609 plus 8 is 1617, 1618, something like that. It's all good. All right. Any current deals? Let's save that. I'm going to put that on my list here. Current deals. We will talk about my my watch list if you guys want to see that. Current deals. I know you're going to like some of them. You're not going to like some of them. But that's what this is about, right? It's not about you doing everything that I do. You can not like what I do. It's okay. But at least I'm sharing it with you. And you can evaluate it on your own. If you like it, use it. If you don't like it, just throw it away. It didn't cost you anything. Billy, he's up 14.85% year to date, and hit a big milestone today for him. Fantastic, man. Doesn't it feel good? I mean, Billy and I are both kind of living this retired world. He's living in a different part of the world than I am, but it feels really good to be, I don't know, how shall I say that? All right, let me build this story up. So you work all your life, right? And you raise kids, you're paying for college, you're saving all this time, right? And so you're saving money, and then you get to the place where you think, maybe I can do this retirement thing. Now, for me, I did it early, so it was really extra pressure, right? But then you have a plan, you build a plan, you say, I've got this money, I think I'm going to be able to live on this and this, I'm going to do this, and so you lay that plan out and you go, it looks great, but I don't know if it's really going to work or not. But when it really starts to work, like for me, like for Billy Johnson here, It's really rewarding, and I look forward to you guys hitting that spot as well. It's a great place to be. I'm not sure if any of you other guys are at that spot yet. I think John Jay, you're getting close to that. So just let me know if you're at that spot. Run DMS. Hey guys, first time live stream watcher. Great to have you, buddy. It's good to have you on the program. Welcome. What any kind of super milestones for you this week? We'd be interested to hear that. So John Jay, what's your performance versus S&P? 30% versus 15 for S&P? Yeah, so no, that's a great question because I don't benchmark against the S&P. And why is that? It's because my goals are different than the S&P 500. So, I mean, I could just invest in the S&P 500, but the volatility that gives my portfolio is pretty significant. I mean, if you look at 2022, the S&P 500 went down like what 27%, something like that. My portfolio was up 1%. So yeah, there are going to be years when the S&P goes way up, and I'm not chasing that. I'm looking for more stability. I'm looking for solid growth. I'm looking for 8% per year out of my portfolio, and I'm looking for low volatility. So those are the things I'm looking for, and so far it's working. And I mean, I do have some volatility. You can see that on the chart that I just showed. There is volatility, but it's not as much as the market. I think what I'll do this week, I think I have enough data that I can go back and look at my portfolio moves on a daily basis, and maybe I can go in and find the data for the S&P 500, do a comparison on the standard deviations, and kind of see what that looks like. But I can sleep better at night. So it's not, for me, it's not about making the same return as the S&P. For me, it's about stable growth. It's about low volatility, and it's about sleeping well at night. So that's what I love about investing. Your goals may be different than mine, and so therefore the S&P might be a good measure for you. And before I retired, the S&P was a good measure for me. And as a matter of fact, I invested a lot in the S&P 500. So that was a good measure for me at that point in my life. Now, not so much. So that's so it's a great question. I'm glad you asked it because sometimes we want to have our cake and eat it too. And I don't know that I can get S&P 500 returns without the volatility. And if I don't want the volatility, then I'm going to have years that I make good money. S&P makes more. I'm going to have years that I make a little less money, but S&P loses money, right? So I'm going to have that play. So hopefully that makes sense. Michael says he's too frugal to pay for Wi-Fi on a phone. Okay. I'm trying to think of what that might be about. And maybe it's one of the stocks that were bought. Oh, I got you. He's I think what it is he's looking at his phone, and he's looking he doesn't have Wi-Fi, so it's kind of blurry and he can't really see everything. So maybe that's what it is. Let me know if I missed something there. Remember, I told you that in the morning I am sharp as a tack, but at night, sometimes my brain just takes a vacation. So all right, here we go. We got Kevin. He says, do you like CVI or is it an MLP? I can't tell. Thank you. So I think we will take a little drink. And this is water. It's water with that little Mio stuff in it. So I don't remember what flavor it is. It has some cherry in it. It's pretty good. All right, CVI. Let me take a look at, and I'm not tracking right now what CVI is. CVR Energy. Yeah, wow. Okay, let me put this on the screen, Kevin, and it is. Let me take a look and see the tax document. It is not an MLP, so you don't have to worry about that. But let me put this on the screen. I'll stop sharing that. Share this screen here. Dun, 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 dun. There we go. Okay. So CVR Energy, that's ticker symbol CVI. It's in the oil and gas refining and marketing business. You can see the dividend is 8.7%. That's pretty nice dividend, right? But remember our rule. One of my rules is I don't chase dividends, right? I look for quality companies. Dividend safety on this one is a 30, which is unsafe. That's pretty low. I don't, I'm already skeptical, right? Payout ratio is 75%. They have, wow, look at this dividend. It is up and then down and then up and then non-existent. Of course, that was during COVID, so we'll cut them some slack there. Then it's been climbing back. They've been struggling a bit with the dividend. And look at this, they've had 7 quarters straight of 50 cents. So they have not increased the dividend, although they did pay a special dividend in November of 23. So let's take a look at some of their financials. Oh, look at that payout ratio, man. Payout ratio over the next 12 months is 189%. So I don't know. That one's going to cause me some consternation, and earnings per share is going way down. Yeah, it has to do with I guess the forward price of gas and oil. Return on invested capital is not so bad. Interest coverage is a little lacking. So I guess my perspective on this, Kevin, is it's not going it's going to be a boo. It's going to be a bad stock for me. So I'm going to pass on that. Hopefully that was helpful. We'll see. All right. TLT. Is that bonds? RoboHand T3CH. Oh, RoboHand Tech, maybe. Man, what a name. That's awesome. Hey, it's great. I don't know if I've ever met you before. It's great to have you on the stream tonight. So let me look up here. We'll do that where we are right here. TLT. Yeah, the 20-year Treasury bonds ETF, 3.57%. That's not bad. If you need to invest in bonds, I think that is a good way to go. I am not a bond investor. I know my buddy Mr. Income is. He invests in a lot of bonds, and apparently does very well with those. I'm not a bond investor. My theory is that when interest rates go up, the price of bonds goes down. When interest rates go down, the price of the bond. Wait a minute, I may have that backwards. But anyway, either way, when stock prices move, they tend to move in the same direction as the bonds. So I just find I'm comfortable in the equity market, so I just kind of stay there. So yeah, I'm not a huge fan of TLT, but it's not a bad investment. It's if you want to add bonds to your portfolio, I don't think it's a bad investment. So anyway, hopefully that's helpful. So Run DMS bought Coin, SWBI, Alphabet. He sold Home Depot and PSA. What is PSA? Public service announcement. No, public storage. That's right. It's the REIT, public storage. Okay. Well, that's good. Sounds like you're moving things around a bit. Be interested to see if you did that because of this week, or if that's just something that you wanted to do in your portfolio. Yeah, Russ says he'd rather buy REITs than TLT. I think that's certainly a fair comment, and I think it really depends on what your goals are in your portfolio, what you're looking for, and whether you want bonds and don't have any. Then it's not a terrible investment either way. REITs are not bad either. So, yeah, Robo Hand Tech says no current REIT deals. That is true. They are skyrocketing. I would say the same thing about utilities. I don't know if that's going to stay, if it's going to stick around, but I do know that I invested, I don't know, a few months ago into NextEra Energy and did not get enough of that before it began to run. So, but I do have, a nice little nest egg in utilities. About 9% of my portfolio is utilities. So, yeah, it's all good, man. So Michael says, H-Town question at Billy Johnson, do you wear white shoes? I may have to explain that, Michael. So there was a receiver. I think he must have played for the Houston Oilers, and his name was Billy Johnson, but his nickname was White Shoes. So Billy White Shoes Johnson. I had not thought of Billy White Shoes Johnson in probably 25 years. So thank you for bringing that memory back up in this rusty old brain. Let's see. Rust loves public storage and the self-storage industry. I do too. I like Cube. I like public storage as well. I'm just not a fan of them at this point. I think they're I don't know if there's a lot of value there. They're really high. Okay, Jim says Walmart was way overvalued. That's probably very true. Walmart family is selling a bunch as well, and they're needing that money. They got to pay that light bill. You know what I'm saying? Tells me that upside, at least in the short term, is limited, and that very well could be. Yeah, absolutely. That could be with a lot of our stocks. Depends on what happens here. Do we go into recession? All that stuff. But the beautiful thing about it is that when the stocks go down, that means that there's more deals out there, and we can put our money to work cheaper, and we love that. Let's see. By selling Walmart and moving it around, I added $250 annually to my dividend income. Fantastic. Good job. Okay, Gabby Bear was down in the South Caribbean, Aruba, Bonaire, and Curacao. Man, heading back to Washington. Boy, that is quite a trip. Well, hope safe travels, and I'm glad you chose to spend your airline time with us. We are so glad you're here. All right. So Bob says he's back to 100,000 after spending a lot on a home remodel. I get that. I will be taking some money out of my portfolio here soon. But you know what? That's why we do it, right? We do it because it makes us money, and we can use that money to do other things, not just invest. But congratulations on getting back to 100K. That's fantastic. Jim sold Walmart at a 55% profit. That's fantastic. Hopefully it was an after-tax account. I mean, a pre-tax account. So if not, you'll be looking for some tax loss harvesting. Let's see. All right. Oh, before I forget, and there's quite a few comments tonight, so I'm really happy about that. You guys are really knocking it out of the park tonight. But there was one question that I got. Let me put this on the screen here. So if you are in the Discord, this will not be anything new to you. Let me take Jim off the screen, and let me share the Discord with you, because there's a question in there that I need to get to. And poof, there you go. Okay. Well, I'm getting really good at this, huh? All right. So we have this section here. It's called Questions for Kevin. And it's been a while since we got one. I think our last one was in August. Now, Honeybee just gave us a question this past week, and it says, do you have any thoughts on the Kroger Albertsons deal? Would you buy Albertsons now or wait? So fantastic question. So first of all, full disclosure, I don't follow either. I did own Kroger at one time. It's been a few years ago. So it's my knowledge of Kroger is a bit stale. But I do know this. I do know that the grocery business is a very low margin business. They need a lot of volume to make that work. So here, let's take a look at a couple of things here. I need to share a different screen. Actually, I'll just talk about it rather than confuse with all these different screens. So Kroger has put a bid out for Albertsons at like $34 a share. Well, Albertsons right now is trading for like 19. I mean, it is well below this $34 per share. And so if Kroger's willing to pay $34 a share for Albertsons, why is it trading at $19 a share? Wouldn't it trade at near 34? And it depends on how risky it appears that investors believe that bid is. There are some issues with the Federal Trade Commission. The thought is that they're not wanting that. They're not going to want that merger to go through because it will actually increase Kroger's size by 50%, their revenues by 50%. It's a huge deal. $34 a share was like $25 billion. So it's a huge deal in the grocery business. So I think there's still a lot of risk that this may or may not even go through. But when I looked at the financials for Albertson versus the financials for Kroger, what I saw was the Albertsons financials don't look that great. They've got some issues with their profits are going down. They're raising their dividend. Actually, they're not. Their dividend is flat, but their payout ratio is going up, which means that they're making less profit each year. They're paying the same dividend but making less profit each year. That's not a great sign. Their interest coverage ratio is less than what we want. So there's just a lot of issues, I think, with the financials at Albertsons. And now, so on the flip side, Kroger has some pretty decent financials. Their dividend safety is much better. They have good growth record in their dividend. Their payout ratios are relatively flat. They are looking at some decreases coming up in the next 12 months in their earnings, but inflation and stuff like that, I guess, is hitting the pocketbook of everybody. So, but overall, I would say the financials for Kroger look much better than the financials for Albertson. So if I were to pick one company over the other, it would be Kroger all day long. However, you have this potential $34 payout that you can get right now for $18. And it really depends on what odds you put on the merger actually going through for the deal that's on the table at the moment. And right now, investors don't seem to be that thrilled about it. So if it were me, where I'm at in life, if I were to invest in either of these companies, it would probably be Kroger, just because it's a better long-term company. But if you're looking for the potential of a pop, that potential pop comes from ACI. So if you bought it for $18 and a year from now you're sitting with a buyout from Kroger at $34, that's not a bad payday. So you have to kind of weigh that. I'm not willing to take that risk because I don't want to end up owning Albertsons if it all falls through. because there is some, it's being held up some by this $34, right? So if the deal falls through, then I think Albertsons drops even further than $18. So you got to weigh all of that, and it's just not a sector I want to spend a lot of time in. So I don't know. So great question, and I appreciate you asking it. Let's move back here to question land. Oh, I got you. Yeah, not phone, plane. All right. He was responding to Gabby Rare. Thanks for clearing that up, Michael. I appreciate that. All right. Yeah, CVI has some of the ugliest seeking alpha ratings I've ever seen. 2 sells and 1 hold. Yeah, that's not very good. Yeah, I agree. Michael Swami says CVI is yield chasing. I don't know, Kevin, if that if we're ganging up on you or what, but I think we're all saying the same thing. Yeah, Michael says yield trap. Yeah, it is scary, Suzuki man. I mean, those are things that we have to be careful of as investors. We've all made these mistakes, right? I've made those mistakes. I've invested in companies that went down. I've invested in yield traps before. So you don't learn without making some mistakes. And so the beautiful thing about a group like this is we've been there, right? And so, throwing these questions out are good things because you get to hear other people's opinions, but it doesn't mean you have to do anything about it. It's your call, but it's just good to get some feedback, get some input on what you're doing. So cheers. All right. Rest Moment says, Suzuki man, don't worry about it. You got EOG. EOG did really well today, by the way. I have some of EOG as well. Jim Betts, you are such a funny man. Consternation equals puckered butt. That is right. There's some consternation there. Yeah, RoboHand Tech. He's new. He likes it here. Great, man. I'm glad you do. We just get together, have a good time, and but at the end of the day, we really want to learn something. We don't want to just sit here and just it's not social hour really, but we do want to have some fun at it. But at the end of the day, we want to learn something. We want to grow as investors, and we want to make some money. So that's why we're here. All right, let's see. Yeah. This I don't think we can have a broadcast without mentioning EOG and saying that it was the only valuable thing that was left from the Enron trade, and that is absolutely true. Yeah, Gabby says free Wi-Fi on Delta, slow and spotty. Yeah, so that's okay, Gabby. You just hang in there. You hang in there, my friend. All right, we got a deluge of things here from John J. CHK, BKR, SLB, and you do a quick check and comparison on SE. All right, so let's just do it. I mean, we're here to look at stocks, right? So we're going to do that. I'm going to switch everybody back over to this. Okay, so I'm just going to do quick check. I don't want to do that. Quick takes on, let's look up CHK, Chesapeake Energy. It is 3.34%. Has they don't, Simply Safe Dividends doesn't cover it. Wow, look at that dividend. Not very good for an energy company. Let's see what kind of energy they are. Doesn't really say. Oh, it's an independent exploration and production company. Yeah, I'm not too wild about those. I mean, I know EOG is the same kind of thing. I would rather have EOG, to be honest with you. Look at those negative dividends. Yeah, I'm not interested in that at all. Payout ratios at 92%. Cash flow payout ratios at 177. Yeah, that's not something that. Let me find it. Hold on, guys. I'm a little slow. Yeah, it's a boo. All right, it's a boost stock. All right, let's see. What else did you have? You had problem is I have to switch out of things to get to my little noises there. All right, so BKR is that Brooks something BKR. No, Baker Hughes. Baker Hughes, 41 and is borderline safe. It's oil and gas equipment. So I think my buddy John Jay is looking in the oil and gas area, and yeah, it looks pretty flat. It is starting to raise its dividend a little bit. 18, 19, 20. They raise it by a penny every year, so you got to give them that. Let's see what their 34. Actually, the earnings payout ratio does not look that bad. Earnings per share is growing. It could be. I would need to do some research. I'm going to give that one. The mediocre clap. And the reason I'm doing that is because I think we need to do some more research. I think we need to understand where they're headed, what their management team goals are. I don't think the financials on this one are enough to give us a stellar good stock return. SLB. Schlumberger. I've looked at that one before. It is 60 safety rating. I want to go down, look at their last 5 years, negative 13%. Their latest is a growth of 10. Of course, it looks like the pandemic hurt them pretty bad. Let's look at some of their financials here. Payout ratio, not bad. Earnings per share is growing. Shares outstanding are they're growing over the last 10 years. Return on invested capital looks pretty decent. And their interest coverage ratio looks good. So, yeah, I don't have any issues with Schlumberger. I mean, if it fits your investing needs,
Yay!
I would say,
Yay!
yeah, go for it. That's so cheesy, isn't it? Okay. And then you said, and comparisons. Oh, SE. What is SE? SA is seeking alpha. Surely you don't mean a stock called SE Limited? No, surely not. I hope not. So I would say no on that one. Okay. Anyway, hopefully that was helpful. Now I got to get you back where my comments are. There we go. You're back. You are back, my friends. There it is. Okay. How do you decide to average up? I'm in AbbVie at 140 and it is 195 now. Yeah, that's a great question, Pat. Man, I wish I had a great answer for you. But I've invested in companies. I've averaged up in companies that I believe the future is extremely bright. So, for instance, Parker Hannifin is one that I invested. I averaged up in. I've averaged up in. Let me look at my portfolio real quick. I'm losing my train of thought here. Atmos Energy is one that I've invested up in. It is a stock that just goes up, up, up. So Atmos Energy, Parker Hannifin. Who else have I invested up in? Hess Midstream is another one that I have invested or averaged up in. So, there's several. But what I look for is so first of all, it can't be cyclical, right? If it's cyclical, it means it goes up and down. So I don't want to average up on a stock that's going to turn around and have a downturn. I want a stock that is going to be a nice growth pattern for quite a long time. And so that's really what I look for. If it's cyclical, I'm going to wait for it. I'm going to wait for it to come back down because I know at some point it will, right? So non-cyclical and a great growth pattern. That's kind of what I look for. Yeah. Great question, though, Pat. And if you got any words of wisdom there too, anybody else, that would be awesome. Simply safe on these. Yeah. I think I hit those. Good deal. All right, RoboHandTech. Vici looks good in the REIT area, and you still have a day to catch the dividend. Yeah, so RoboHandTech, what he means there is that the dividend ex-dividend date is coming up, and evidently the ex-dividend date is Wednesday, because if he's saying you have Tuesday, then you can buy the stock tomorrow and still get this quarter's dividend. If you wait till Wednesday to buy, the stock price typically would be a little bit lower to compensate for that dividend, but you won't get this most recent quarter's dividend. It would be the next dividend you would get. So hopefully that makes sense. All right. Billy White Shoes Johnson was most famous as a kick returner and end zone dancer. Yes, he had quite the dance in the end zone. Billy Johnson says white Pumas. Good job. Awesome. Yeah, Billy's got some nice REITs here: FRTO, OHI, WPC, and Vici. So yeah, I bet they're all doing very well. Fantastic. Let's see. Yeah, that's right, Russ. Tell them. Join the Discord. The link's in the description. Absolutely. Yeah, I think it's Kroger, KR. Kroger is very thin margin, poor ROIC. Yeah, that's the case in that grocery business. It is really, really thin margins. So I just now, there's and also I will throw this out there. Morningstar does not give either Kroger or Albertsons a moat rating. They they have a rating of no moat, and what that means is they don't have a real competitive advantage that's going to let them earn above their cost of capital over the long term. So that's the way Morningstar sees it. Whether you agree or not, at least you know. So Russ says he'd rather be in grocery stores than the dollar stores. Yeah, that's probably true too. Yeah, I agree with you. Let's see here. You guys are having some conversations, which is fabulous. But I just got to find where the good questions are. Oh, yeah. Okay, here we go. Ex-dividend dad. Google has, or I guess I should say Alphabet, right? Alphabet has gone up a bit. What's on top of your watch list? I am so glad you asked, because I'm happy to share it with you. Let me stop that share, hit this share, go over to this and hit that. So this is my watch list. This is where I track these stocks that I track. There are now 70 stocks in this list, and I have a formula that I use. It's a formula where I try to identify and calculate based on the historical numbers and maybe even current numbers, where I believe the potential return is going to be in 1 year. And so why do I do that? I do that because, first of all, it's really hard to compare 70 stocks unless you've got some consistent process to do it with. And then secondly, I can take that number, since it's 1 year out, and I can compare it to what the analysts are saying. And that's kind of cool, because sometimes we don't agree, right? So that's really kind of cool. So I can calculate my 1 year out, and then I can compare that to what the analysts are saying. So if I look at the top of my list, the top is still Lamb Weston. I do believe it is extremely undervalued. I think there's a lot of potential for that. It may take a long time for it to hit, but I think according to my model, it's going to grow by 24%. The analysts are saying it's only going to grow by 10%. So, I mean, that's not the worst thing in the world either, right? To grow by 10 or to grow by 22, I would take either of those. Now, Comcast is second on my list, and I know somebody. I think I don't remember who it was. I don't want to say because I would probably get it wrong, but I have them. They show up really well in the model, and even the analysts are saying, "Hey, it's a 22%." I'm saying 19%. I'm just not a huge fan of Comcast's strategy. I'm not a huge fan of the content market, that whole communications content stuff. So I don't really. It shows up near the top of my model, but in all fairness, and in full disclosure, I don't invest in Comcast. Now, if it drops more and drops significantly, I may consider it. So that's why it's on the list. Is it's not like a complete no, but it's going to have to be a really, really good deal for me to consider investing in Comcast. Third on my list is Alphabet, Google. Look at this. Google still is now almost 3% of my portfolio, and it's been going up. It went up 0.3% today. So yeah, things are looking good for that. I would say also Chevron is a buy, and now it went up 1% today, and so did Hess Midstream. Hess Midstream went up 1.28%. And when these stocks go up, it actually impacts what I think the next year will be. So those will come down. So if a stock does very well, it might actually drop in my list here, and that makes sense, right? It should do that. So but Hess Midstream, I'm still a huge fan of. As you can tell here, I'm saying that there's going to be 8% growth there, and the analysts are saying 6%. So we're actually pretty close. Now overall, I say it's going to be 15 because you got a nice dividend there, 7.2% yield. So that's fantastic. Visa, I think, is still a good buy. MasterCard's a good buy. I don't want to buy both, so I picked Visa, but you can't go wrong with either one of those. Now ADP, and let me see if all right, I'll. And you can tell some of these are out of order, and it's because I didn't resort it after the market today. So maybe I should do that. Let me resort this, largest to smallest. There we go. Now, hopefully I don't have to. No, I still got to talk about it. I was going to say, hopefully I didn't have to talk about ADP, but so ADP, Altria. Altria is actually up there. It's around a 15%. And its big deal is the yield. So, I don't own Altria at the moment, but if it were to get really undervalued again, I might consider it again because I think it's a good investment. Now, analysts think it's going to go down by 2%. I think it's going to go up by 7%. So we'll see. We can always come back to this video a year from now and see who was right. And then I've got another buy here, which is Microsoft. Microsoft is a buy. I'm showing it a 14% growth over the next year, 14% total return over the next year. I'm thinking the growth is 13%, and analysts are saying 15%. So we're actually pretty close on that. One other buy that I have is Verizon. Now, Verizon has gone up. It was up 1.28% today. I might actually change this to a hold now because it's gone up quite a bit. It is trading at $45 a share. I was buying it at $39 just, I don't know, a month ago. So it has gone up significantly. I think I'm going to wait on it. It is 2.25% of the portfolio. So it's a pretty decent size. And, I don't plan to make it a huge part of the portfolio, but I do want some exposure to Verizon. And United, oh, no, never mind. All right, that's the only other buy I think that I have. Oh, U.S. Bancorp, but it's been going up as well. So, but I do like it. And so anyway, those are my top stocks, ex-dividend dad. So probably no surprises in there, but you may agree or disagree with those. Oh, and if there's any stocks that you think I should add to this list, let me know. I'm always looking for adding to it, because the way it works is I can download the information that I need. So it's not like I'm going out and looking for every company. So I can compare even up to 100 stocks and see which ones kind of filter to the top. For great yield on EPD, that's Enterprise Partners. Started buying them at 1850. He owns a lot. That's a nice yield too, my friend. Good work. Yeah, no taxation because it's an MLP. Let's see. Let's hear about we always hear about this. Is Run DMS. Great question, and that's the question about averaging up. We always hear about not averaging down losers and taking profit, but never adding to a position. Would love to hear the response. Okay, hopefully that was helpful, because I do that from time to time, and I gave 3 examples of stocks that I have averaged up on. Let's see. Yeah, Michael, I agree. Chevron is a solid and a low-cost producer. I agree. I like Chevron, and I've been adding some Chevron, but it's only 1% of the portfolio, so I need some more. And it went up 1% today, so yeah, we'll see. But I only have 26,000 in cash right now, so I'd have to sell something to buy any significant amount. But I'm not opposed to doing that either. I've got my eye on one in particular. So, yeah, Billy, I agree. If you like oil, buy Chevron. All right. Let me see if there's anything else. Oh, is that right? Wow. So Michael Atmos is one of Michael's competitors. I did not know that. So, sorry about that, but they have been an incredible investment for me. So hopefully it's not a bad situation there. I enjoy the sound effects. Good job. I do too. I think they're kind of fun. All right, let's see. Oh yeah, no, great point, Jim. I never really answered Pat's question about AbbVie. I don't know with the healthcare stuff. I mean, unless it's something like a Johnson & Johnson that just goes up steady Eddie every year, I would tend to not average up in AbbVie at this point. I could be wrong. I've been wrong before, but I sold out of my AbbVie, and I'm not re-entering. So that tells you that I wouldn't average up either if I'm not re-entering at this point. Let's see here. Yeah, so the cool thing about this group is we don't always agree, and that's okay. Michael owns Comcast, and he's actively buying it, and that's fantastic. The financials are great. It's got a growing dividend. I love the financials. I have owned them before because of the financials, but there's just something about the strategy that really, really bothers me. So I sold out of them. Yeah, doesn't mean I won't buy them again, but at this point, not at this price. Oh, good deal. El Dynamico is happy to report that he's been loading up on Chevron. He's up to 7 shares right now. Fantastic, my friend. Good job. Yeah, Michael's buying CVX or Chevron. And I'm buying Chevron. All God's chilling buying Exxon or Chevron. Exxon's a little high right now. So Bob wants to know if Meta is a buy. I don't follow Meta, and maybe I should add it to this list. And we are way over time, but you know what? Since you've asked so nicely, Let's go take a look at it. Just because we can. Oh, that's the wrong one anyway. Here, let's go to this one. We're going to go to a different screen. Let's take a look at Meta. Meta, the old Facebook, or the new Facebook. All right, dividend safety is 70. Of course, their dividend is very, very low, but that's okay. We know they only do it for the fun of it anyway. Payout ratio is 9%. Yeah, they haven't been paying it very long, and Google's the same way. Yes, I don't know. So earnings per share is growing like crazy. So let's do this. Let's go to Morningstar because I want to see what they're worth. So META, because to me that matters. Valuation matters. Now, Morningstar says that Meta is worth about $450 a share. Obviously, $450 is a one number. We know that fair value is a range, so it's not necessarily just at $450, but it could be 10% below, 10% above that. But it seems to be that it's about a 19% premium to fair value, so it might be a little expensive right now. So I would say, based on that, I would say financials look great, everything looks great, but I think it's just a little bit expensive right now. Oh, let's do this. You want to check it out in Fast Graphs, Meta? Fast Graphs is really kind of cool for this kind of stuff too. Now, Fast Graphs would say, here, let me get it down to about 10 years. Yeah, there we go. Take out some of those early years, and it's funny how it changes things. So Fast Graphs would say it's a little bit on the pricey side as well. But, it's certainly a good stock to own. I just think it's a little pricey. Now, but that being said, if you buy it here, you're basically just, buying it early. You just have to wait for those earnings to come around is all. It's okay to buy a really nice growth stock early. You just have to wait on it, right? You just have to wait on those earnings to come around. So I would say the answer would be, is it a buy? I think it's a buy for the long term, but I think it's a little bit pricey right now. I personally would wait to see if it would come down a little bit. Yeah, Michael says his company has been an incredible investment for him. That's exactly right, and that is fantastic. Atmos got a new board member today. I didn't see that. I wonder who it is. I wonder if it's anybody I would know. Okay, my battery light is flashing at me. So, but before we head out, ex-dividend dad is wanting to know about ARCC. So this will be our last one. Let's take a look at ARCC. Let's since we're already here in Fast Graphs, ARCC, Ares Capital. It's probably my second favorite business development company behind Main Street Capital. Looks to be fairly valued, actually undervalued, according to Fast Graphs. Let's see if I don't know if they would even cover it in Morningstar. Maybe they do. No, they don't. It's basically a quant rating. You can tell by that Q there. Quant rating is 23. It's I've really rarely ever seen it be below the stock price. It's got this. I think it's got a biased calculation in there that says stocks are always going up, right? So I don't really trust the Morningstar piece of that. Let's take a look and see what. Let's see what the analysts are looking at. This is Tip Ranks. Analysts are saying that there's about an 8.5% upside to Ares Capital. So that's not It's not terrible. And is there anything else I want to look at? We'll just look really quick at this. ARCC, 9.4% dividend yield. Not an unusual borderline safe rating. And they haven't grown their dividend recently, though. Although it looks like they did. No, it's been, they've had 8 straight quarters of 48 cents. I don't see any special dividends. So, it may be something to consider as well. Although this chart shows that they are going up in dividend. I don't quite get that. But it looks like their last 8 payments have been 48 cents. So I would say, let's do that. Let's do real quick. Let's take a look at Main Street Capital. Main Street Capital is just a little bit better rating. Now, obviously, the the dividend yield's a lot different, 9.44% versus 5.87 for Main Street Capital. But take a look at these dividend payments. I mean, that's a much better. Now they've been 6 quarters, right? But just look at the consistency of that dividend growth. That's what I like about it. They pay these special dividends as well, and their payout ratios have come down a lot. They're doing very well. So I guess if I were to pick a BDC, it would be Main Street Capital. I would not pick Ares Capital, but Ares is my second favorite. So if Main Street didn't exist, I would be picking Ares Capital, if that makes sense. So that's kind of where my head is. All right. So I think that's where we're going to leave it, guys. I really appreciate you guys being here. I love being on this show with you guys. You're the reason that I'm here. And again, if you want to be a part of the Discord, there's a link to it in the notes of this video. And I'd just love to see you there. We do have some conversations. They're typed, but they're conversations. And it'd be fun to see what happens on Wednesday. I'm sure the Discord will be abuzz about what Papa Powell does on Wednesday. So with that, I want to get out of your hair. I really appreciate you guys. And I will just see you guys on the next one. Take care.